The Coin Lady channel is pleased to have you back. Dear everyone, Bitcoin and the cryptocurrency industry's major release. Just recently, Bitcoin had its reward structure halved, reducing miners' payouts from 6.25 BTC per block to 3.125 BTC. This is significant for a very straightforward reason. They attempted to front-run it, and we just saw that, because the top markets saw this as a bullish event. Also, this is significant for the market cycle since it shows how supply is decreasing while demand is rising. We will review reports from Grayscale, as well as Fidelity Investments. Without a doubt, we have the latest piece from Cointelegraph stating that the milestone event witnesses a decrease in Bitcoin mining payouts, once again falling from 6.25 to 3.125, with sources linked below. Another consequence of this for Bitcoin is that it will increase the workload of miners. However, the largest miners should be able to cope with this. The less well-funded mining operations are likely to fold under the pressure of the current market conditions, leading to a consolidation, in which the strong will emerge victorious and the weak will fade away. This is in line with the expectations of many, who are predicting that Bitcoin prices could reach $250,000 per coin based on historical market cycles alone. If there is a slight slowdown here, I wouldn't be surprised. It will take some time for that supply shock to really kick in, though. Some of the fear of missing out, FOMO, will begin to fade as we approach this thrilling event, and we may witness some miners give in to the pressure, causing a stir in the industry. And thus, in the financial markets, we often experience the summer doldrums, when activity slows down slightly. It's going to be an entirely new game. As we observed before the halving event, the SEC had approved the first exchange-traded funds, with BlackRock and Fidelity taking the lead and injecting a lot of additional capital into the Bitcoin asset. Prior to the halving, we have never witnessed Bitcoin reach new all-time highs. There is no denying that this is unique. We shall see the lengthy unfolding of this groundbreaking masterpiece. According to Bitcoin investor Tim Draper, the reduction in supply is the primary cause of the price increase following the halving. Also, in a free market, when demand is constantly going up, prices will go up as well. So, that was basically the gist of my opening statement for this video, nothing fancy. This report is now available in Grayscale. The positive Bitcoin backdrop persists, and the title is Market Bite, Glass Half Full, April 9th. Remember, there's a lot of uncertainty in the market. That's why they aren't claiming that Bitcoin or cryptocurrency prices will rise in the near future. Consequently, this is a really exciting place. However, there are certain danger signs that we must not ignore. According to the article, even though the economy is doing well, the Federal Reserve is still planning to cut interest rates this year. This is because short-term rates are already higher than what policymakers consider to be neutral. There are a lot of rumblings about how rates will stay high for a while, and the Fed may not cut at all. I share this opinion. I think rates will come down eventually. However, there is significant economic risk if we remain in this restrictive fiscal policy and rates stay high. So, keep an eye on this, especially in the short term. In Grayscale's research, consider the macro backdrop and the favorable supply and demand technicals brought about by the halving. These factors could lead to what we have observed in the past would be consistent with that. In the near future, a few months from now, the bull run continuous might happen tomorrow, or it might take longer, but if past events are any indication, we are getting close. This is after you go through the halving and the supply shock. Moving on with the story, we learn that Ethereum is making waves in the cryptocurrency market, which means we're entering the altcoin space, where Ethereum and other smart contract blockchains are competing. If you want to know which hypothesis is popular, it's Layer 1 smart contracts. Among blockchains, with the strongest ecosystem being that of the Ethereum blockchain. Layer 2 apps, Layer 3 data, and all the action in DeFi, gaming, and Web3 are here. It used to be that BlackBerry had all the apps before Samsung and Apple introduced their own smartphones. Thus, exercise caution in this situation. Additionally, the SEC's approval is required for the next spot Ethereum ETF, which is currently waiting. I believe it will be extremely positive for more than just Ethereum if they do. The wider market, however, will catch up in due course. However, we are aware that the SEC's stance is hostile toward cryptocurrencies. They are actively working to impede our progress in any way they can. Will they still grant us permission if the court rules against us, like we witnessed a Grayscale doing? Some individuals inform me it turns out that, unlike what some may have told me, the price of Bitcoin has been very stable since hitting an all-time high on March 13th. Just a short while ago. This part is now crucial. Despite the fact that several macro risks have grown, now that we can see that events unfolding in the Middle East are unquestionably raising the level of risk, and that the economy is exhibiting troubling indicators, we can say that we are in an era of high risk. And yet, despite that pessimistic outlook, there are more reasons to be optimistic than pessimistic. The prevailing opinion is that prices will remain elevated throughout the year. It is recommended to closely monitor inflation figures and the tech industry, as there may be another major push towards artificial intelligence. Does that, keep technology progressing? And of course, the growth of war and conflict is just another risk factor that needs to be monitored. Here at Fidelity, we have an intriguing report about channel splicing on Bitcoin's Lightning Network. They are really investigating this topic and exploring different Layer 2 solutions with Bitcoin. There's a lot happening in this emerging field of cryptocurrencies, but I don't see enough coverage of it. The purists are against it. They see Bitcoin only as digital gold and a means of storing value. Anything beyond that is considered blasphemy. And we won't see anyone taking advantage of these technologies and innovations. People will utilize it if it adds value. Given the current state of Ethereum and the amount of development happening on Bitcoin's Layer 2, I believe that Layer 2 scaling solutions will be a huge success. If you're interested in this splicing of Bitcoin's Lightning Network and want to read further, you can get the source from Fidelity. I think there's something there, and it's a lot bigger than simply Lightning. Finally, this is a very intriguing legal matter. The man in question is Avi Eisenberg, and he was found guilty of a $110 million fraud scam involving the Mango market. And, of course, cryptocurrency fraud. It's just one of those things that happens all the time. He did not, however, dispute the events of this court case. The entire system was essentially gamed by him. While Eisenberg never denied his strategy's validity, he did argue that it was permissible under the DeFi protocol. So, give him the software. Hey, code is law, he exclaims. What he did was basically borrow other cryptocurrencies on the platform, using his inflated futures holdings as collateral, then swiftly withdraw those assets and run away with all of the collateral. If it was permissible, it must have been illegal. Along with that, Ron effectively drew everyone in. This was the first instance where someone knew exactly what they were doing and used the software in an inappropriate way. It seems like you were taking a lot of money that wasn't really there, contrary to how the system was intended to work. But it was possible using the default protocol. It was, in a sense, according to the established rules of the game. Still, it was irrelevant to them. Here we go again. You're abusing the system, you're being strategic, and you're capitalizing on vulnerabilities. And they took them down right here. Next, we'll have to watch the results of his sentencing. Also, convicted of $110 million in fraud. This is going to take him a while. And I believe this establishes some precedent that says, look, if you're going to engage in gaming, it doesn't imply you'll get away with it just because it takes place within the cryptocurrency space. Reason being, the technology is novel. There is brand new technology, We shall apply the law with an eye toward common sense. And that was something that this man learned to his dismay. The video ends there. Do me a favor and subscribe to my channel. Coming up shortly, farewell.